A very good afternoon, ladies and gentlemen. Welcome to the 25th of August weekly market review. We are coming to the end of August, and last week we got a good news from Fed Chair Jerome Powell. But before we dive into that, let me welcome Gerald to the show. How are you, Gerald?
Hi, Sunny. Hi, everyone who has joined us for today's weekly market review. So I think you're right that late last week we saw a rebound in the market after we got more indications that there might be a potential rate cut coming through soon.
Yes, all eyes were on that announcement on Friday night, 10 p.m. Singapore time, and Fed Chair Jerome Powell finally signaled that he could ease monetary policy in the next Fed decision meeting. And the sort of the expectation of a September rate cut jumped to about more than 80%. So I think I'll let Gerald take us through some of the details that were shared by Jerome Powell last week.
Sure. Okay, before we start, the usual disclaimers that today's sharing is for informational purposes only and should not be taken to be financial advice. Okay, if you find the weekly market review helpful, do leave us a review on Google. And if you'd like to join SIAS as a member, you can scan this QR code or go to the website sias.org.sg/membership. As a SIAS member, you can access various online resources as well as investor education programs. So what we saw in the past week was that initially there was a sell-off in the markets led by tech stocks, but eventually we saw the S&P 500 having a gain of 0.3% for the week and closing at 6,467 points. The Nasdaq saw a rebound on Friday, but we are still down for the week at about 0.6% loss, driven by a sell-off in some of the mega cap tech names, particularly the AI-related stocks, due to some profit taking, as well as reignited concerns that some of the AI-related spending might be too significant. In Singapore, we actually did well. The STI saw a 0.5% gain to 4,253 points. So the big news that really came out last week was on Friday, where we saw Fed Chairman Jerome Powell giving his speech at the Jackson Hole Symposium. And I think there were a few things that were worth noting. I think definitely he continued to note that the employment market is something that is worth keeping a lookout for, given some signs of weakness that we have seen in recent months. But at the same time, he also said that current conditions may actually warrant a rate cut. So that was interpreted by investors to mean that we may potentially see an interest rate cut in the upcoming Federal Reserve meeting. So the next one that's coming out is on the 17th of September. And based on what we have on the CME FedWatch 2, traders are pricing in close to a 75% probability that we'll see a rate cut to 4 to 4.25%. Okay, thereafter, we are also looking at potentially another rate cut in December. So that will bring the total number of rate cuts in 2025 to 2 rate cuts. So this is what we see for the US government bond yields. After last Friday, there was a fall in the US one-year government bond yield, reflecting this heightened expectations of a interest rate cut that may be coming soon. So now we are at about the 3.9% level for the US one-year government bond yield, having fallen from about 4.1% in late July. Okay, I mentioned earlier that the Singapore market saw a rebound in the past week. If I were to look at some of the names within the STI top performers, we have a number of REITs here. So Mapletree Logistics Trust up by 2.6%, CapitaLand Integrated Commercial Trust up by 2.3%. So that largely reflects the fall in the bond yields that we have seen. In Singapore, we have seen the one-year bond yield, the 6-month T-bill, the 10-year government bond yield coming down. So that is helping to drive improved sentiment towards the Singapore REITs. Okay, in terms of the worst performers, we saw some profit taking in ST Engineering, Yangzijiang Shipbuilding. So some of these names have actually done well year to date. which might actually explain this profit taking, especially after their most recent earnings results. We also saw one of the companies reporting their earnings, that is SETS. It is a name that has been laggard within the Singapore market compared to some of the other industrial names such as Semcop Industries, ST Engineering. So we see here effectively over the past year, it has actually declined, having a sell-off with the acceleration of concerns around the trade tensions and how it would impact their business. Since then, it's recovered, but still we are not back to the levels where it was at the start of the year. Okay, so if I were to look at the first quarter fiscal year 26 earnings, which is the quarter ending June 2025, what we see here is that the revenue actually grew by 9% year on year. The net profit also grew by 9.1% year on year to 70.9 million. Okay, so these are a summary of the operating statistics. We see a year-on-year growth in terms of the cargo tonnage that were handled, an increase in the flights handled, an increase in the aviation mail served. But what we saw would be a decline in terms of the non-aviation meals that were served, either from a year-on-year basis, where it actually came down compared to the previous year. But if I were to look at some of the key drivers, if I were to look at the cargo tonnage, the flights handled, all of them would actually reflect some kind of growth compared to the previous year, which actually led to the improvement in revenue for SETS. Okay, so I think for many investors, they are looking out very closely for the cargo tonnage handled by SETS, especially after the acquisition of WFS. And what we see here is that the total tonnage handled grew by 10.4% year on year. And the pace that SETS has been growing has actually outperformed the industry trend over 7 consecutive quarters. So that is being reflected in the revenue. We see here, if I were to look at the cargo revenue, that grew by 12% year on year. The ground handling revenue grew by 9% year on year. So in total, the gateway services revenue grew by 11%. In terms of the food solutions, we saw the continued volume growth in the aviation business. So that led to an 8% growth in the revenue. The non-aviation saw the decline in the volume, which is why the revenue was flat in this division. And overall, the food solutions business still grew at 6% year on year. So in total, we see a 10% growth in SETS revenue compared to the previous year. Across the different regions, in Singapore, APAC, EMEA, as well as Americas, SETS managed to grow its revenue across all of these regions. So the growth is actually still fairly even. Okay, so if we were to look at the breakdown at this point in time, cargo is the business that is contributing the bulk of SETS revenue after the acquisition of WFS, now making up 52% of the entire revenue. Ground is 26%, aviation is 16%. So that effectively gives us a good breakdown of the businesses for SETS. Across the different regions, it is quite evenly spread out as well, where Singapore and Americas would make up about 35% of the revenue each. Okay, then we saw the revenue growth for SETS, but for SETS, we also saw that the margins have been flat compared to the previous year. So EBITDA margin maintained at 18.2%, profit after tax margin maintained at 4.7%. Okay, so that once again will reflect the stable operations for SETS. Last but not least, we look at the balance sheet of SETS. This was something that investors were keeping a lookout for after the company took on debt for the WFS acquisition. But overall, we see some of these leverage ratios coming down. The gross debt to EBITDA ratio has come down to about 3.5 times as of June 2025. And the EBITDA to interest coverage ratio has improved to 4.4 times from 4.2 times in the previous quarter. Okay, so if I to look at the valuation of sets at this point in time, given the earnings growth, it is at about 16 times PE, below the historical average. The dividend yield has not fully recovered, given that the company is still now more cautious in terms of the dividend payout, as it slowly improves on its balance sheet position. Okay, so we are now coming to a quieter reporting season for different companies, but the key one that many investors are keeping a lookout for will be Nvidia earnings on 27th of August, as well as Alibaba earnings on 29th of August. For those of you who are income focused, we also have the Singapore Savings Bonds application closing date on 26th of August and the Singapore 6-month T-bill on the 28th of August. So with that, I'll hand over to Sunny, who will share with us the technical analysis.
Okay, thanks, Gerald, for that coverage on sets and some of the key events that we should look out for coming to the end of August. I think the focus will be on Nvidia earnings next. But let me touch on the Singapore market first. So last week, the STI index, as to what Gerald shared, is up about 0.5% or up about 22.5 points or so. Okay, so it falls within our expectation at what we have sort of projected last week, that the index will move along this shaded area over here that we have identified. So over the past 1 week, we also saw some profit taking on the major US indices with some major pullbacks, okay, on the US index. This is a flight to safety, I would say, because going into the Jackson Hole meeting where the whole market, a lot of investors are looking for the Fed chair to signal some kind of monetary easing in September. Some of investors do not want to take that risk and sort of take profit during the last week period. But Singapore-wise, that also play into our favor because Singapore is more seen as a risk-averse market and more of looking for yield. So Singapore STI index actually sort of benefited from that movement in the pullback of the other major markets last week. So we are now at the 4,260 points level around there. Year-to-date high stands at 4,282 points seen on the 14th of August. So that also could have formed a double top formation with the high that we saw on 24th July as well at 4,274. So this will remain a very strong resistance level to watch out for around the 4,270 points or 4,270 points level. This early morning, we actually touched the 4,274 points level, and you can see that the index dropped back again to below that level. So this level will stay. So if let's say you are investing into the STI index, it would be wise to take some profit once we see 4,270 or 4,280 points level. Support level will comes in at the lower bound of the Bollinger Band first at 4,166 now. The 20 days moving average at 4,224 will be the pivot level because what we observe now is the STI moving in a horizontal kind of a formation. So the 20 days moving average will be the pivot level with the support coming in at the lower bound of the Bollinger Band at 4,166. The 50 days moving average now at 4,123 is also trending upwards. That will find some confluence with the lower bound of the Bollinger Band sometimes in the next few weeks, giving the STI more support around the 4,160, 4,150 level. The previous low that we observed on the 4th of August at the low of 4,144 points will also find confluence with these two support level as well. Hence, the STI level at 4,150 should see some technical bias coming in to support the STI index. Okay, so the MACD indicator is now slightly negative. Okay, we sort of closed the gap between the signal line and the MACD line last week. but then we still did not have a sort of a break above that signal line. Hence, the neutral or the downside pressure to the STI index right now is still present according to the MACD indicator. The RSI now at 61 point reading has also rebounded back up from the neutral reading of 50 point last Monday. And we are now close to the 70 point mark now. So let's say if STI were to have any spike up in the index points to the all-time high of 4282 again, the RSI may reflect a 70 point reading. That could mean that the index is in an overbought level, and hence coincide with the theory that it would be wise to take some profit off the table for the STI index around the 4280 level. Okay. So that's my take on the Singapore STI index. Another thing to note is we also saw the IH S-REIT index jumping 1.18% up this morning as well. In line with what Jerome mentioned, the yields are coming down, and with that Friday announcement that the Feds are going to cut rates in September, that could be the next catalyst to push the risk holder units up higher. So IH S-REIT index up 1.18% this morning. Next, let me move to the major US indices. We saw a new all-time high on the Dow Jones index. It was up 1.9%, more than 800 points last Friday. So you can see that the high now stands at 45,757 points. Looking at support level, definitely the blue line that you see here, that is the 50 days moving average at 44,116 points. Okay, that will be the first support level that we are looking at for the Dow Jones index. And then the low bound of the Bollinger Band at 43,580 points will be the next support level that we should look out for. But given that the Fed has already signaled that they could ease monetary policy, right? I think what investors need to look out for on the US market going forward will be the first thing will be the PCE index coming at the end of the week on 29th of August. We would want that data to sort of reflect that inflation is in control. It has to be in line with market consensus or maybe lower. So that would further reinforce the Fed rate cuts projection going forward to 17 September decision. So the Dow Jones index could sort of a trend along with the upper bound of the Bollinger Band for some time, just like the period that we saw in the early part of July. So that is the behavior that we are likely going to see. So like I always said, it's always not advisable to chase the market. And what Jerome always preach is time in the market is always better than timing the market. Okay, so if let's say it were to trend, I think there is no rush to get in. But let's say if there is any data between now and the 17th September rate decision, I can line them out for you. The PCE index coming up end of this week. We also have the non-farm payroll data coming out first week of September, followed by the CPI data coming out on 11th of September, which is 1 week before the 17th September Fed decision meeting. So these are the three key US data that I'm looking at to see if there's any data that could come in out of market expectation with a pullback, and that could represent an opportunity to get back in at this support level that I mentioned. Okay, so MACD is positive now after last Friday bump up, so indicating that there's more upside to come, definitely. So it's a positive reading. That's hence the theory that it will trend where the upper bound of the MACD line is. The RSI at 67, very strong reading, very close to the 70 point overbought level as well. But as long as it stays below that, markets still have some headroom to move slightly higher. Okay, the high that we saw in 3rd of July was the 75 point reading. So we have about slightly less than 10 points of headroom to move upward for the RSI before it hits real resistance level of the overbought level. Next, let me move to the broader index, the S&P 500. We did not manage to get a new all-time high on last Friday, but we got it at the Friday before. So on the 15th of August, Friday, we hit that all-time high at the level of 6,481 points. Throughout last week, right? So the last 5 trading days, it was a profit-taking week because a lot of stake is focused on the Jackson Hole Symposium announcement. Hence, investors chose to take profit throughout last week on the US indices. So you can see that even though there are some profit takings for the 5 trading days last week, we are still supported by the 20 days moving average. And once that announcement came in that validates all in the, investors' expectations, the broad index jumped back up to 6,466 points, up about 100 points or 1.5% last Friday. Okay, so where is the index likely to hit? Given what we saw, I think likely it will follow where the Dow Jones index is. It will likely trend along the upper bound of the Bollinger Band. Then the 20-day moving average could become a good support to get back in. So the first support that comes in will be 6,385, with the lower bound of the Bollinger Band now finding confluence with the 50-day moving average at about 6,265, 6,269 level. Okay. MACD indicator is still slightly negative, but we can see after Friday's performance, that gap is narrowing between the MACD and the signal line, and a crossover could happen. And once that crossover happens, it could signal the start of a new uptrend, okay, for the next few weeks. On the RSI, the reading at 62 now breached above 1 point above the 14 days RSI moving average and trending sharply towards the 70-point mark. So that could mean that there is a lot of strong momentum in the S&P 500 index right now. And I will not be surprised if we are able to test the upper bound of the Bollinger Band at 6,505 points in the next 2 to 3 weeks. Okay, so these are the levels I need to watch out for the S&P 500 index. Lastly, let's move to the tech-heavy Nasdaq Composite, which rose close to 400 points or 1.88% last Friday. You can see that throughout the past 1 week, it has also been the case of a lot of profit taking because the volatility going into the Jackson Hole Symposium was very high. So investors seek safety and make the pullback. Okay, during the week, it dropped the most compared to the other indices because you can see it breached below the 50-point, the 20 days moving average and got very close to the lower bound of that Bollinger Band. And then after that, there was some buying in on Thursday. I see that as a market is confident that Jerome Powell will sort of ease monetary policy or signal to ease monetary policy, and then we got that confirmation on Friday. Okay, so the index now is at 21,496 points. The high stands at 21,803 points. So we are about 300 points away from the all-time high that we saw on 13th of August over here. Okay, so that would remain to be the first resistance level, upper bound of the Bollinger Band at 21,855 points, just 50 points above the all-time high. And I think that would likely be where the index will be heading in the next couple of weeks. Okay, on the indicator wise, I can see that the MACD is still slightly negative. The sort of the rebound or the converging of the MSCI towards the signal line is not as prominent as the other two US indices. There could be one reason because there are concerns that some of the tech rally has reached its peak already, and this growth is likely going to be spread out through the other the other components of the market, the other industry in the markets. Hence, people are seeking that valuation of the tech stocks could be too high at this moment. Okay. On the RSI, we also have the reading at 59. So we rebounded from last week low of about just 1 point below the 50-point neutral mark. Hence, this is a good indication that the rebound will still continue for the next 1 or 2 weeks at least. So there's still a good chance that we will test the all-time high for the Nasdaq Composite Index, especially that we have Nvidia earnings this week. And that could really move where the Nasdaq Index is going to move in the next few days. Okay, so these are the updates that I have this week. Anything else that we need to look out for, Gerald?
Yes, indeed, Sunny, you're right. Nvidia earnings will be very closely watched for investors in tech stocks in the US market and will likely impact the overall sentiment towards the markets. In the meantime, I think many investors are also looking out for the upcoming Federal Reserve meeting, given the heightened expectations of the rate cuts.
Yes, so with all these developments coming out in the market, we will always be here to update you on the weekly market review. So do stay tuned every Monday to our weekly market review, and we will see you next week in the next episode. Thank you very much. Goodbye.
Thank you.